What's up, everyone? Netranand here, and today we're tackling one of the biggest early retirement puzzles, health insurance before Medicare. If you're planning to retire before 65, losing that employer health plan can feel overwhelming. Medical bills are no joke, but don't panic. There are real affordable options out there. You just need a clear roadmap, and that's what I'm giving you today. We'll break down COBRA, the marketplace, HSAs, and more, step by step. By the end, you'll know exactly how to secure coverage and enjoy your freedom stress-free. Smash that like button and let's dive in. First up, COBRA. It lets you keep your employer health plan after you leave your job. Same coverage, same doctors. Sounds great, right? But here's the catch. You pay the full premium plus a 2% admin fee. No more employer subsidy. That affordable deduction from your paycheck? Multiply it by 3 or 4. Sticker shock is real. COBRA is usually a short-term bridge, up to 18 months, sometimes a bit longer for special cases. If you're retiring at 50, COBRA won't get you to 65. It's a stopgap, not a long-term solution. When does COBRA make sense? If you need uninterrupted care with specific doctors, or you're just months away from another plan, like your spouse's coverage or Medicare. For most early retirees, though, COBRA is a just-for-now option while you find something more sustainable. Your employer will send you a COBRA packet after you leave. Pay attention to deadlines, or you'll lose the option. Bottom line, COBRA is expensive but can buy you time. Know the cost before you retire, and don't rely on it for the long haul. Use it as a bridge, not a destination. The real goal? Find a more affordable, long-term plan ASAP. Don't let COBRA's price tag scare you from retiring early. Just plan ahead. Get the numbers from HR before you leave so you're not blindsided. If you need seamless coverage for a few months, COBRA can work. But for most, it's motivation to explore better options. Remember, COBRA is a tool, not the answer. Use it wisely and keep your eyes on the bigger picture. The sooner you move to a more cost-effective plan, the better for your retirement savings. Don't let high premiums drain your nest egg. Plan, compare, and transition as soon as you can. COBRA is there if you need it, but don't get stuck. Next, let's look at options that can actually save you money. Ready? Let's move on. Affordable coverage is out there. You just need to know where to look. Let's keep going. Now let's talk about the health insurance marketplace, your best shot at affordable coverage before Medicare. The ACA marketplace, healthcare.gov or your state site, is where you can compare plans and, crucially, access subsidies. If your retirement income is moderate, you could qualify for premium tax credits, sometimes slashing your monthly cost by hundreds. Plans come in bronze, silver, gold, and platinum tiers. Lower premiums mean higher out-of-pocket costs, and vice versa. The key subsidies are based on your projected income, not your old salary. Manage your withdrawals, and you could save big. Estimate your income carefully. If you guess too high or low, you might owe or get a refund at tax time. Lost your job-based coverage? You get a special enrollment period, usually 60 days, to sign up. Marketplace plans must cover essential benefits: doctor visits, hospital care, prescriptions, and more. Don't just pick the cheapest plan. Check networks, deductibles, and out-of-pocket maxes. Smart retirees manage their taxable income to maximize subsidies. Think Roth withdrawals or careful investment planning. A good financial advisor can help you hit that subsidy sweet spot. The marketplace is a lifeline for early retirees, affordable, comprehensive, and designed for people just like you. It takes a little planning, but the savings can be huge. If you're retiring before 65, put the marketplace at the top of your list. Compare, apply, and lock in coverage that fits your needs and budget. Don't leave money on the table. Use those subsidies. Next up, what if your spouse is still working? Here's a powerful, often overlooked move. Join your spouse's employer health plan. If your spouse is still working, you can usually hop onto their plan as a qualifying life event when you retire. It's simple, fast, and often much cheaper than COBRA or private insurance. Yes, the premium will go up, but employer plans usually offer better rates and coverage than what you'll find solo. Review the plan details: premiums, deductibles, networks, and out-of-pocket maxes. Factor the new premium into your retirement budget. It'll come out of your spouse's paycheck. This option keeps things simple. One plan, one set of rules, less paperwork. Don't miss the enrollment window, usually 30 or 60 days after you lose your coverage. Talk to HR ahead of time and have your paperwork ready. For many couples, this is the most cost-effective and hassle-free solution. It's a team effort. One retires, one keeps the benefits. Compare this option to COBRA and marketplace plans to see what's best for you. If your spouse's plan is solid, this could be your golden ticket. Don't overlook it. Sometimes the best solution is right at home. Next, let's explore private insurance options. Let's talk about buying private health insurance directly from an insurer off the ACA marketplace. Sometimes you'll find unique networks or plan designs not available on the exchange, especially if you need a specific doctor. But here's the catch: no subsidies. You pay the full, often hefty premium. This route is usually for higher income retirees who don't qualify for ACA tax credits. If you're shopping off exchange, read the fine print deductibles, exclusions, waiting periods, and whether the plan is ACA compliant. Some off-exchange plans aren't required to cover pre-existing conditions or essential benefits. Don't get caught with junk coverage. Use a reputable broker if you need help, but always compare multiple quotes and ask tough questions. Don't be lured by a low premium if the coverage is weak. For most early retirees, the marketplace is a better deal unless you have very specific needs or a high income. If you go private, do your homework and proceed with caution. The cheapest plan isn't always the best value. Protect your health and your wallet. For most, private insurance is a backup, not a first choice. Know your needs, compare options, and don't rush the decision. Next, let's talk about a secret weapon for healthcare costs, the HSA. Ready for a power-up? Let's talk about the health savings account, your secret weapon for healthcare costs in early retirement. If you're on a high-deductible health plan, HDHP, you can open an HSA and get triple tax benefits, tax-deductible contributions, tax-free growth, and tax-free withdrawals for medical expenses. That's huge. No other account offers this combo. Use your HSA to pay for deductibles, co-pays, prescriptions, dental, and vision, tax-free. If you've built up an HSA during your working years, you've got a dedicated healthcare fund for retirement. HSA funds roll over year after year, no use it or lose it. You can even invest your HSA balance for long-term growth, just like a 401k. Pro tip: if you can, pay current medical bills out of pocket and let your HSA grow. You can reimburse yourself years later, just keep your receipts. When comparing health plans, check if any are HSA-eligible HDHPs. If the plan fits your needs, max out your HSA contributions. The tax savings are too good to ignore. An HSA is a powerful tool for making healthcare more affordable and protecting your retirement savings. It's peace of mind in a tax-advantage wrapper. Don't overlook this option, especially if you're healthy and comfortable with a higher deductible. Build your healthcare war chest now. Next, what if your income is very low? Let's talk Medicaid. Stay tuned. The right tools make all the difference. For early retirees with very low income, Medicaid can be a lifesaver. If your income falls below your state's threshold, often 138% of the federal poverty level, you might qualify for comprehensive, low-cost coverage. Medicaid eligibility is income-based in most states, not asset-based, thanks to ACA expansion. Coverage is robust: doctor visits, hospital stays, prescriptions, and more. Apply through your state's Medicaid office or healthcare.gov. Don't let stigma or pride stop you. If you qualify, use it. Medicaid is a legitimate option for those in a low-income phase before Medicare. Know your state's rules and plan accordingly. It's about protecting your health and your retirement savings. We've covered it all, from COBRA's sticker shock to marketplace subsidies, spousal plans, private insurance, HSAs, and Medicaid. The key takeaway: you have options. Early retirement health insurance is manageable with the right plan. Compare, strategize, and don't let fear hold you back from your dream retirement. Like and subscribe for more early retirement tips. Drop your questions or experiences in the comments. We're all in this together. Your healthy, secure retirement starts now. Thanks for watching. See you in the next video.